Hello, the Trading Guide here with another Forex trading strategy using Fibonacci and some other indicators and of course market structure. Again, here is my favorite pair EUR/USD on the 30 minutes chart, and what I can see here is a huge move to the downside, and then I wait to see a possible reversal to the upside. We have some indications, for example here an RSI that is rising above the level of 50. This is my own indicator with that you can display a stochastics and two RSI. The RSI that I use here has a length of 14 and I use it here to display the development of the trend. But the base of everything, of every strategy that I'm going to show you is market structure. I use the indicator higher high, lower low with the green lines for the lows and the red lines for the highs, and here we see that a previous high is broken. And then I'm interested, okay, because now I want to see price coming down and I need an entry point with an indication that price is going higher again. And this is where first of all my Fibonacci comes into play. I draw it from the previous low to this high, and the zone that I prefer for an entry is between 50 and 61%. So I wait for the price to come back down to at least this level. If it doesn't come down that far, I don't take the trade. But if it comes down, I'm interested. I go to replay mode now so that it looks like as if this is a realistic trade. Now price broke the previous high and then it comes down and taps into my level. Some guys like to enter here already because you have this rejection wick, which is a good indication that price is not going down even more. But another approach that I like to use here is to drop to a lower time frame, for example the 15 minutes, and then you can wait for more indications that price is going to the upside. To my indicator for EMA trend, I added an overlay for engulfing candlestick patterns for the bullish and the bearish side. And now we want to see just the bullish ones because we are going long, or we want to go long. And in this indicator you can activate a second RSI, which is set here to the length of 2. Now when these RSIs are crossing, it can be interpreted as a momentum, in this case to the upside. But don't trade these indicators alone, it is just a confirmation of our trading idea that is based on market structure. Okay, so fundamentals first. Okay, so I wait here for a candlestick pattern, a price action that tells me that price could go up now again. And here we see this green overlay, the bullish engulfing in the zone of the Fibonacci, and the RSI is crossing to the upside. So probably a good entry. So go ahead and place my order here, the stop loss to the latest low. And now let's find a potential take profit. For this I search a previous high on the left side in the chart, and here I see a red line that I use for the take profit. So this is my trade, it will be around 1 to 3.8, which is a quite good risk to reward ratio. So go ahead and play out the replay. It takes some time, but at this point we win the trade. Okay, nice. Now let's have a look at an example for going short. It is the same principle. Again, we see here a strong move, this time to the upside, and then a zone where price is not going higher, which is also called a double top. Then it is breaking a previous low, and then I want to see price coming up to a level that I draw in with my Fibonacci, and I start from this high and go down to this low. But in this case price is not going up to my zone between 50 and 61%, so don't consider taking the trade. I wait till price is breaking again a low, which you can see here, so I draw in another Fibonacci, this time from the high to the low, and now price is coming up into the level. Again, I go to the replay. It is this candle here that is going into the zone and a bit above. This candle is touching the zone, tapping in the zone, but I want to have a better confirmation that price is going down. The RSI is still above the 50, and perhaps we can see a better price action, like a bearish engulfing that I enable here in my indicator. You see this red overlay for the bearish engulfing candles. And then I go again to the lower time frame to perhaps get an entry with a good stop loss. Here see, it's still going up. Also RSI is still rising. Now about to go down, but not good enough. And at this candle I get a rejection wick to the upside and the RSI, the 2 RSI, falling below the 14 RSI. Also the stochastics crossing to the downside. So I'm going to enter the trade at this candle. So let's see, the stop loss I can set to a previous high. This one here that could also be regarded as an order block. So it could be that the price is tapping into this level. Alright, but now let's see for the take profit how far we can go. I see here a zone, a previous low. To that I can plan the trade, which is pretty far. And if the price is going down to this level, it is a 6-hour trade. So play this out and you see, we can take profit pretty fast. And if you would hold the trade to this low here, well then this is a risk to reward of 1 to 9. This means when risking $100, you can earn 900 here in this trade. So I hope this was understandable. Here you see a live trade that I took on the Euro USD following the same principle. Fibonacci, price comes into my zone, RSI is crossing, stochastics overbought and crossing to the downside, and entering here when I see a bearish engulfing and a candle with the rejection wick to the upside. I'm risking 160 and yeah, perhaps we can hold it to 668. A few hours later you can see that the trade is doing pretty good, but I think I have to close it because I see some rejection to the downside, but it's a trade that I won't lose anymore, definitely. So guys, I hope you found this understandable and you like it, and if you like my channel then please don't forget to subscribe. If you have any questions then add these to the comments below, follow me on Twitter or go to Tradingview where you find my free indicators. Thanks for watching and I'll see you in the next one here on the Trading Guide.